Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. This weekly Deal Watch brought to you by Marijuana Business Daily. It's about cultivation, retailing continue to dominate capital raises. Throughout the first 2 weeks of March, cultivation and retail continued to be the most attractive for capital raises, with the sector raising more than $2.7 billion during that period compared to $1.3 billion in the same period last year. Top raises that closed last week include Green Peak Innovations, a medical cannabis cultivator based in Michigan that raised more than $30 million in an oversubscribed debt round, which is interesting because generally it's equity. So if they're financing debt, that means it's high demand. That means investors are willing to take on those assets. So that's good news. The funds are going to be used to support Green Peak's expansion in its home state, as well as plans to take the company's scalable model to other states. So multi-state operator is obviously the number one investment vehicle right now for Canadian companies that have access to capital, bringing that capital back to the states and then expanding state by state. Another top raise that closed last week is Toronto-based World Class Extractions, a privately owned cannabis extraction company that closed on a $22 million private equity placement. Alephia Health closed a $173 million acquisition of Ontario-based cannabis producer Emblem, hurdling further consolidation in the cannabis marijuana industry. And then Texas-based Golden Developing Solutions closed its acquisition of CBD producer Infusion Z. Golden Developing CEO told Marijuana Business Daily the deal was valued roughly at $5 million. So which market has a bigger upside, the US or Canada? While sales in both markets are predicted to continue to rise over the next few years, it appears that the American market, that CBD could come out on top. For years, experts have predicted that if the cannabis industry expands at its current rate, the American market will reach $20 billion by 2020. But it turns out that one market's spinning off into a mega industry on its own. According to a new estimate from cannabis industry analysis, the Brightfield Group, the hemp CBD market alone could hit $22 billion by 2022. Look for Jennifer Krager on this podcast August 14th at the World Trade Center in Seattle during HempFest, talking all things cannabis. An article in Forbes is quoting the industry studies worldwide where they deem that the recreational market will continue to dominate. The North American cannabis market will go from $9 billion last year to $50 billion in 2027. Spending on legal cannabis worldwide is expected to hit $57 billion by 2027. According to ArcView Market Research, over the next 10 years, the legal cannabis industry will see a lot of progress around the globe. Spending on legal cannabis worldwide is expected to hit $57 billion by 2017. According to ArcView, that's going to happen 10 years faster than what Forbes is predicting. So the adult use market will cover 67% of the spending, and medical marijuana will take up the remaining 33%. The largest group of cannabis buyers will be in North America, ranging from $9 billion in 2017 to $50 billion a decade later. The largest growth spread, however, is predicted to be the rest of the world markets, from around $50 million spent in 2017 to a projected $2.5 billion in 2027. And still, the remaining difference between the US and Europe cannabis markets is that the US recreational use will dominate sales. With a budget of $1.3 trillion in healthcare spending, European government subsidized healthcare systems will bring the medical cannabis market to dominate Europe and become the largest medical market in the world. Germany alone has, I believe, 70 million potential patients, all covered by medical expenses. And cannabis is going to be exporting the majority since Germany isn't allowed to cultivate yet. Cannabis-infused drinks could be a $600 million market by 2022. Infused drinks with cannabis-derived compounds could swell to become a $600 million market in the U.S. within the next 4 years, outpacing the growth of other categories of retail cannabis products, according to analysts at Canaccord Genuity. Canaccord sees the demand for beverages featuring CBD or cannabidiol, the non-psychoactive component in cannabis, reaching a $260 million market cap by 2022, up from the negligible revenue the limited number of drinks contributes now, while the THC-based drinks could reach $340 million, up from $106 million expected this year. And so what will the long-term cannabis markets look like? Probably more mergers and acquisitions. And Forbes expects mergers and acquisitions as a big player in the cannabis markets, starting to align with existing big brand conglomerates, possibly alcohol and tobacco producers. I think the majority of the consolidation, capitulation, and M&As will happen from Canada-influenced capital coming in, but you're also going to see a lot of FOMO in the US. I just got 2 calls yesterday for automated joint rolling equipment, and the individuals just decided based on a report because they saw the market cap that joints have being 12% of the market share in the US and Canada roughly, that they all of a sudden want to jump in and start investing. So there's going to be a lot of late investors, novice investors, people who don't quite understand, but they just see where the money is at. And that's just now starting to happen. Forbes has always viewed the cannabis space as one that would eventually be dominated by large alcohol and tobacco producers. Companies with deep pockets to grow new brands, experience to navigate legal restrictions and distribution, and the operational excellence to squeeze profitability from highly competitive marketplaces. They expect that there's a smaller artisanal farm that cater to connoisseurs or consumers looking for something a little different. Their view is something akin to the way that the beer market looks today, with large producers dominating sales and new craft brewers popping up every day. But in cannabis, they believe that the majority of supply will be acquired and delivered by large alcohol and tobacco producers because the opportunity is so enormous and compelling for them. Tobacco and alcohol companies should want to participate in the first major consumer drug product to be legalized since maybe the end of alcohol prohibition in 1933. So whether you think the global opportunity is 75 billion or 250 billion, it's a huge new market, and companies like Constellation Brands, Philip Morris, Molson Coors, and others will be compelled to participate by the possibilities of this new global market. U.S. cannabis industry to flourish in 2019, but who gains? The cannabis industry has strong potential, especially after legalization for recreation and medicinal use. Moreover, the industry is getting benefits from expansion into other industries like food, beverage, tobacco, and cosmetics. Growing legalization of recreation or medicinal marijuana is likely to bolster investors' confidence in this industry. Legalization has long been considered a boon for the marijuana industry. Canada has become the first major world economy and the second country after Uruguay to legalize recreational use of cannabis. Cannabis is getting official approval from many U.S. states for recreational uses, in addition to medical usage. Though pot remains entirely illegal at the federal level, currently 33 states have green-lighted medical use cannabis, while 10 states have allowed recreational use. The cannabis industry is considered as extremely volatile. Most of these companies are in the early stages of development and characterized as risky for investors. However, this industry has been providing fabulous returns to investors in 2018 before legalization in Canada. Since the industry is in its nascent stage, even a minor negative may become the cause of major stock price fluctuations. Notably, in October of 2018, a news of shortage supplies resulted in a panic selling as investors looked to offload risky stocks. According to some industry experts, 5 to 10% share price volatility daily should not be considered as unnatural for this industry. Major U.S. listed cannabis companies are likely to gain from the industry's early stage boom. As evidence of strong demand in the U.S., pot companies have engaged in deals as of late. In the last 1 year, share prices of major cannabis companies such as Tilray, Cronos, Canopy Growth, and GW Pharmaceuticals have jumped 213, 175, 77, and 51% respectively. Evidence of cannabis normalization keeps rolling in, with BlackRock, a huge hedge fund, disclosing an $11 million investment in medical marijuana firm Curaleaf. BlackRock is one of the world's largest money managers and disclosed in regulatory filings that its funds have an estimated $11 million stake in Curaleaf Holdings, a Massachusetts-based medical cannabis company. And while the investment is tiny for BlackRock, which has nearly $6 trillion of assets under management, the stake is one of the first publicly disclosed investments by a major institutional investor into U.S. cannabis. Most institutional bankers and banks have stayed on the sidelines for investing in cannabis businesses that touch the plant. But BlackRock's investment makes it the largest institutional investor, at least in Curaleaf. BlackRock wasn't waiting for any approval, and yet we still saw a major move last week. Among the bills scheduled for markup last Tuesday, the U.S. House Committee on Financial Services is the Secure and Fair Enforcement or SAFE Banking Act, which would provide federal protection for banks serving state legal cannabis businesses. The legislation, which has been dormant in Congress for several years, received its first committee hearing last month under a new Democratic-controlled House of Representatives. It would prevent federal banking regulations from punishing banks for working with cannabis-related businesses that are complying with state laws. So according to the National Cannabis Industry Association, or NCIA, the bill would also require the Financial Institution Examination Council to develop guidance to help credit unions and banks understand how to lawfully serve cannabis businesses. Canadian company Ascent Industries saw the writing on the wall with flower prices declining, and so they maybe jumped a little bit too quick and sold some oil, and then Health Canada slapped them last year, and they continued to sell it, and then they lost their license. Ascent Industries is the, I believe, first and only company that has completely lost their license as a result of not following the rules. So as a result of losing their license, they have to piecemeal all of their property, plant, and equipment, all of their assets. And so they are set to sell their Canadian cannabis operations for $41.5 million. The company's creditor arrangement, pursuant to which the vendors have agreed to sell the purchaser substantially all of the assets comprising the Canadian business of the vendors, and the purchaser has agreed to assume certain liabilities of the vendors, including the vendors' obligations to purchase a greenhouse located in British Columbia. The aggregate value of the transaction is approximately $41 million, comprised of $29 million in cash considerations to be paid for the Canadian assets and the assumption of liabilities of approximately $12.5 million. Ascent, through its subsidiaries, will continue to own the assets related to their cannabis cultivation, production, distribution, research, and product development businesses outside of Canada in Oregon, Nevada, and Denmark. Last I heard, they were losing their Nevada license, though, because they held improper or illegal events, and they also weren't in compliance, and it was taken into consideration that they're losing their Canadian license. It's all a little bit surreal for me. I was up there a year ago trying to help them with the automation and joint and blunt rolling equipment, and then all of this came out, and it's been kind of crazy to see. But it's early. It's a nascent industry. I'm sure we're probably going to see a lot more of these, but it's really unfortunate because there were some good people in that company. Among the bills scheduled for markup last Tuesday, the U.S. House Committee on Financial Services is the Secure and Fair Enforcement or SAFE Banking Act, which would provide federal protection for banks serving state legal cannabis businesses. The legislation, which has been dormant in Congress for several years, received its first committee hearing last month. It would prevent federal banking regulations from punishing banks for working with cannabis-related businesses that are complying with state laws. So according to the National Cannabis Industry Association, or NCIA, the bill would also require the Financial Institution Examination Council to develop guidance to help credit unions and banks understand how to lawfully serve cannabis businesses. The SAFE Act could also help shift U.S. cannabis sentiment. The three-day meeting session of the House and Financial Services Committee that concluded on Thursday, March 28th, had a 45-15 vote in favor of the Secured and Fair Enforcement Banking Act of 2019, otherwise known as the SAFE Banking Act. During the opening remarks on Tuesday, Chair Maxine Waters said that the group's goal with the bill is to protect consumers. She described it as a holistic approach to criminal justice reform due to the impact on the criminalization of cannabis, particularly on those affected by its illegality. And the SAFE Banking Act could also help signal a larger shift in public opinion that may ultimately help legalization like the STATES Act to gain traction. The STATES Act is a policy bill aimed at offering similar banking protections and allowing the legal operation of cannabis companies at a state level. Several multi-state operators in the U.S. have placed heavy bets on passing of the state's bill, and Bloomberg reported that analysts at Cohen and 8 Capital share a bright outlook on the impact of the SAFE Banking Act. Managing partner at Meridian Capital Partners said, quote, American multi-state operators like Acreage and Curaleaf Holdings are much bigger than most Canadian companies. I can't see the appetite for U.S. banks to lend to most Canadian licensed producers over the multi-state operators. Regardless, cannabis legalization is poised to be a discussion topic for the upcoming 2020 presidential election, as several Democratic hopefuls to the candidacy have stated strong positive sentiment towards a clear-cut legalization path at the federal level. States like Illinois aren't sitting back waiting for the STATES Act to be passed at the federal level, so they're passing statewide banking bills to protect banks serving cannabis businesses. So an Illinois Senate committee voted to advance a bill that would prohibit the Illinois Department of Financial and Professional Regulations from taking any action that would penalize or dissuade banks and credit unions from serving legal cannabis-related businesses. It's not only happening in Illinois, but in West Virginia as well, as a justice signs a cannabis banking bill, although it's still years out. The West Virginia Medical Cannabis Act passed in 2017 that allows patients to register with the program. But on Tuesday, the governor signed into law a bill that would allow a state treasurer bid out banking contracts for medical marijuana to different types of banking institutions, including credit unions, given that as vendors announced their unwillingness to participate in the program. Quote, without a process to accept and distribute funds related to applications for permits and fees associated with the implementation of the Medical Cannabis Act, and without funding for the programs, the OMC has not been able to proceed along with the original timeline previously established. Once their issues are resolved, New timelines will be established for the implementation of the program. The US is trying to figure out banking, and Canada is trying to figure out taxes. Lawyers say new Canadian rules in the recent released federal budget provide clarification around some of the uncertainties faced on new cannabis businesses and medical cannabis users. The budget changes the way excise tax is calculated now. The greater of either a flat rate based on a cannabis product's weight or quantity in its packaging, or a rate calculated based on the cannabis product's sales price. While the calculations may become simpler, the government may also be missing an opportunity to bring clarity to the issue. Canada has more issues than just taxes. They're having a lot of returns because of bad product that has either low testing or visible powdery mildew or just overall bad product. And so people are going back to their trusted dealer, aka black market or medical without medical cards. And so we're starting to see more discerning customers demanding a better product. In Portland, we've just seen a massive overproduction where too many producers were allowed licenses, and now there's over 1 million pounds in excess. So between Canada's quality control and Oregon's pricing control, there's definitely some issues within the marketplace. Portland is seeing $6 eighth of an ounce as the future of cannabis. I've seen prices as low as 8 cents a gram for B grade bud and trim, with retail prices in Seattle as low as $40. Businesses and investors in emerging cannabis markets need to prepare for around 50 cents a gram wholesale. There's a big spread between what the producers are trying to ask and what the processors are willing to spend. So for example, a 1 gram joint from a producer in Washington is trying to be sold for $1.70 that I've seen. And then yet the buyer is only willing to spend 50 cents. So that margin is obviously going to have to come back to reality. Otherwise, those individuals will be out of business, especially with the automated machines coming out. That reminds me, you got to check back to the automated episode we'll be hosting at the World Trade Center, April 19th, for automation with machinery, joints, blunts, pre-rolls, packaging. Be a good one. You might not be seeing it yet, but the price of cannabis is crashing nationwide. To see the future of cannabis prices, just go to Portland, Oregon, where an eighth of an ounce used to cost as much as $60, and you can get a full ounce now for $40. Since at least 2012, researchers predicted that the mature legalization price would be 1/10 of the cost of prohibition pot. And in some markets, those days are finally here. Top shelf eighths in Portland can be had for $18, and the bottom goes as low as $4 per eighths. So why is legalization prices crashing? RAND research has calculated that 90% of the prohibition price of pot could be attributed to the so-called risk premium, which is the extra amount shoppers pay to cover the risk of arrest, fines, and prison for growers, distributors, and sellers. The old risk premium, coupled with the high demand, it drove the price from cannabis to silly heights by the late 90s. So a pound of dried, cured OG Kush from California went for $5 per pound, and eighths in college went for $60. That was the standard price. Today, illicit outdoor farmers reported that they're lucky to get $500 a pound. This year, Oregon sits on a surplus of legal cannabis so big it'll take Oregonians 6.5 years to smoke it all, according to the Oregon Liquor and Cannabis Commission. Oregon has about 1,000 licensed growers with 1,200 more applications pending. Oregon licensees grew 2,000 tons of cannabis in 2018, and Oregon prices have fallen 36% since 2016. Consequently, Portland's $50 retail ounces have become the stuff of legend. Officials estimate that 55% of state smokers buy cannabis legally instead of the illicit market because prices are so cheap. That stands in contrast to California, where an estimated 80% of consumers remain in the illicit market due to high prices, taxes, and a few legal stores. In many respects, cannabis promises to follow in the footsteps of every other agricultural crop since the 30s. Industrialization and consolidation has driven the cost of food to near historic lows. When America decides it wants to grow anything, we grow a butt ton of it and farms go bust. In 2019, non-cannabis farm bankruptcies are at a decade-long high, driven by overproduction of soybeans and Trump's trade war with China. According to the United States Department of Agriculture, Americans in 1960 spent 17% of their household budget on food. Today, we spend 6.7% of our household budget on food. Produce is plentiful and cheap. Cannabis is heading that way. Cannabis has been commoditized, and commodities are a race to the bottom in terms of prices. And we're seeing that in California as flower is 77% more expensive than the black market. And so market share is declining according to a BDS analytics report. The market share of cannabis flower continues to fall in California, likely representing an even sharper decline for the rest of the United States. Data from BDS Analytics shows that cannabis flower had a 56% share of California's legal cannabis sales for the first quarter in 2017, but by the fourth quarter of 2018, it had fallen 34%, with an 8-point drop occurring between the fourth quarter of 2017 and the first quarter of 2018. Other consumption methods such as edibles and sublinguals saw modest gains as well. While flower fell 12 points between fourth quarter 2017 and 18, concentrates took over half of the lost market share, gaining 9 points according to BDS Analytics. The report notes that cannabis flower could see a further drop as the emergence of new product types and delivery mechanisms hit the market. BDS reported that soft gel pills, teas, gummies, disposable vapors, and live resin sauce all saw triple-digit gains between the fourth quarter of 2017 and the fourth quarter of 2018. When asked if there's a basement price for flower market share, it's been suggested that a further decline still could be on the horizon. Smoking will never go away completely, but the figures don't bode well for market share of cannabis flower in other states. Companies are constantly looking for money, and whether that's trying to sell oil up in Canada before it's legal to do so, there's a lot of financial pressure to make more sales. And so here's 6 ways companies can maximize their sales prices. Consolidation is a natural phase of any industry life cycle, and as legal cannabis undergoes rapid growth, the market is in a new phase of consolidation. Many players are eyeing the cannabis market, including highly capitalized companies in traditional industries looking to enter the market via acquisition, and established companies seeking to expand their footprints by absorbing competitors. Giving such interest, 2019 comprises to be an explosive year for cannabis mergers, acquisitions, and expansion. This month, Verano Holdings was snapped up by Harvest Health for $850 million, featuring one of the country's largest cannabis companies with hundreds of retail and cultivation facilities. The industry is in a land grab stage, with the opportunity for Harvest Health to add so many retail facilities and cultivation centers, which was key. You see large multi-state players rushing in to capture market share and position themselves for further expansion. Conversely, the need for cash is driving many smaller cannabis companies to offer themselves for sale. Many of the mom and pop operators seeking capital have no access to banking services or business loans. Hopefully, the Safe Banking Act offers some solution, but there's no certainty of adoption. Many of the acquirers are publicly traded companies listed on the Canadian Securities Exchange. As their valuations rise, they gain access to capital. And when they see discounted valuations or small cannabis businesses, they jump at the chance to build their brands, increase their footprints, and raise public market valuations. Thousands of cannabis companies are potential acquisition targets. So here are 6 steps a company can take to make itself more attractive to acquisitions to help seal a successful sale. Number 1, enter with an exit in mind. A critical first step is entering the cannabis industry is to develop an exit strategy in a hyper-competitive environment. Many sellers not thoroughly understanding their business structure, cost structure, or where they stand relative to their competition will quickly be out of business. To realize a successful sale, business owners need to have identified their stress points so they can address any shortcomings ahead of a deal, rather than reacting to the last minute and being forced to sell at a deep discount. I've seen people that don't have exit strategies, and they're almost at a point where they're getting in their own way, like founder syndrome. Rather than controlling all of the reins and not letting that go, they would be able to expand faster and farther. But again, the founder syndrome is a thing. They're just kind of getting in their way. It's not necessarily self-sabotage, but it's limiting because they don't have an exit strategy. They think they're going to have this business forever. Number 2 is investing in branding. Big tobacco, liquor, and pharma are all entering the cannabis market and inspiring many of the existing players to build their brands, raise their profiles, and attract top dollars in any acquisition. They usually do this by acquiring smaller retailers themselves, strengthening their brand through integration and deploying brands in new states. I would argue that branding is just starting to become a thing. Maybe I'm wrong. I don't know. Let me know. But with Charlotte's Web, is it really the brand, or is it the claim of children's epilepsy? That's, in my opinion, what's driving. It's not the brand. It's not the trust, because there's a lot of companies that still have issues. Let's look at Canada. There's no branding up there whatsoever, but they have a lot of investment. Why? Because they have access to capital. It's the sales, it's the revenue that's driving the decisions, not the branding. So people aren't going to the Stanley Brothers because of Charlotte's Web. They're going because they developed a cure for epilepsy in children. That claim is what's driving these sales, not the branding. I don't know of a single brand. And in fact, I would argue if you look at any celebrity endorsement, those brands are doing worse. Nobody cares about celebrity endorsements. Nobody cares about cannabis branding yet. Maybe I'm wrong. What do you think? Number three is sweat the small stuff. Companies that do well and attract top dollar in an acquisition are those that work hard at every phase of their business, whether pounding the pavement to get their products in every dispensary or working with bud tenders to raise their product profiles and recommendations to customers. Elbow grease is huge. What I realized with the Headset interview last week, Headset, by the way, is a data aggregation company. They have awesome industry reports, headset.io, and look for industry reports if you haven't already seen that. But what they have is a retailer report that shows how much turnover is involved and really how important the bud tender is. There's also a report that shows the advancement of SKUs. Don't quote me on this, but I believe only 17% in 2015 had more than a couple hundred, whereas right now we're seeing the best stores have between 1,000 and eventually 2,000 SKUs. That's a lot. How can any bud tender recommend your product? So without a little bit of elbow grease, getting out there and doing some in-store promotions, you're going to be lost at sea in a drown of products. So you really got to get out there and make your brand something. Number four is get your financials in order. To maintain an accurate valuation of a business, a seller must have sound financials with proper financial statements to prevent any last minute rush when an acquisition comes calling. For example, there's a focus on federal income tax compliance, local sales and use tax compliance that can present complications during due diligence. Unknown federal, state, and municipal tax liabilities can negatively impact a company's valuation. Not only that, but if you give a pre-money valuation in the millions of dollars and you don't have any sales, you're losing credibility right off the bat. So you got to make sure that when you create your valuation, that you're not going to scare people away by some ridiculous number. Honestly, if you haven't made any sales, you probably don't have a brand. If you don't have intellectual property and no sales, you shouldn't be asking for millions. You're just going to scare those individuals away. So it's important to get your financials in order. Number five is kind of a repeat of hire a professional management team, including finance. Professionals from other fields are joining cannabis companies, bringing mainstream business practices with them. Companies must choose their management team carefully, as investors and acquirers often cite management as the most influential factor in their investment or purchase decisions. On the flip side, management teams are also increasingly thought of as the most important point of exposure and liability in a company's operations. Ultimately, more and more investors are looking at it through the mainstream lens of investment, where it's looking at the technicals, the fundamentals, and management, all indicating that the industry is becoming more normalized. Number six is build a data room. Data is one of the top investment vehicles, right behind multi-state operators and right in front of consumption cafes. A data room is an online warehouse of business documents to help buyers best evaluate a company. A data room enables the seller to provide valuable information in a controlled manner, which can help speed up an M&A process. It should include key documents, including contracts, intellectual property information, employee information, financial statements. Due to the nascence of the industry, even the largest of deals is not always based entirely on proper metrics, where offerings may be not supported by actual projections. The reality is that the sales price of this industry is still based on somebody's best guesses due to the lack of metrics upon which to base prices. Full visibility into a company's data room can help buyers and investors feel confident about their acquisition target and positively impact the valuation. Valuations are important. So as a capital markets analyst, what I would do is set up what's called a football field analysis, have about a half a dozen metrics, and then present my case with each one. So the first one, or maybe the most used, is a discounted cash flow. So what you'll look at is earnings per share from the base company and the acquirer, and then post-merger, you're going to look at whether or not the earnings per share are accretive or dilutive. A comparable analysis is another metric that you can use using EBITDA, or the earnings before interest, taxes, depreciation, and amortization. You would analyze the financials before the transaction as well as post-merger. Public comps are really nice, but as the article goes in, there aren't really a lot of available numbers. You need to look at acquisition comps or transaction analysis. That would be ideal, but probably difficult to find right now. And what we're not really seeing is leverage buyouts, where you have a company with a low leverage, high free cash flow or EBITDA, and a low price to earnings ratio. I think we'll start to see more leverage buyouts in the future. And the reason that a lot of these companies are looking at these options is to increase revenue, increase production for operations. Another one is increase market share in order to get efficiencies in cost. Financial advantages is to reduce financial costs and borrowing costs. What type of weed smoker are you? A survey reveals characteristics of the typical weed smoker in 3 key states. The majority of cannabis consumers are male. They span in age from 22 to over 55. Got mostly A's and B's in high school and say that shopping for cannabis is more like shopping for fine wine than cheap beer. The discerning tastes and purchasing habits of consumers in early adopter states, Colorado, Washington, and Oregon, are the focus of a new study by DHM Research that highlights how legalized cannabis is playing out in the retail landscape. They needed to focus on research on states that have legalized cannabis for both medical and recreational use, and importantly, did it long enough so that there may be enough time to measure the changes in behavior. The study examines the preference of regular, occasional, and infrequent cannabis users across the 3 states. It looked at completed surveys from 900 respondents, 300 in each of the key states. Overall, the cannabis consuming population in the 3 states was found to mostly mirror the average US population in terms of household income, political composition, race, and ethnicity, yet skewed heavily towards males. And while household income ranged from less than 25,000 to over 150,000, the majority of regular users fell at the lower end of the income spectrum, earning less than 50,000 per year. Although cannabis consumers describe the cannabis shopping experience as akin to seeking out fine wine, infrequent consumers still feel apprehensive about visiting a dispensary. Just 41% of infrequent consumers describe the retail dispensary experience as comfortable, compared with 72% of regular consumers. Infrequent consumers also tend to describe the dispensary experience as uncertain and intimidating. The uncertainty could also explain why males prefer to shop for cannabis alone, while females prefer to shop with others. Among male consumers, 72% said they'd rather shop solo, while 45% of females said the same. The 2 biggest reasons given for cannabis consumption were to reduce stress, anxiety, and pain. When you think about cannabis as a replacement for alcohol or opioids, the size of the market takes on a much different look and feel, the study's author noted. The consumers who seek relief from stress or pain can now address those issues through an easy access to numerous retail outlets and an abundance of products, all tailored to fit their individual preferences. According to the study, most cannabis users reported their family upbringing as middle income, with parents who were somewhat strict. About equal number of respondents described themselves as introverts versus extroverts. With new states legalizing cannabis, they're seeing an increase in emergency room visits, mostly because of oils being 99% or just really strong doses of edibles, oils. And if you're not used to it, your heart's going to palpitate, you're going to overdose, and you might end up getting cannabinoid hyperemesis. The larger portion of the acute psychiatric visits associated with edible exposure is troubling, given the capacity of THC to cause or exacerbate psychosis and the risk for violent behaviors linked to cannabis-associated psychosis. The study looked at nearly 10,000 patients who had a cannabis-related emergency room visit between 2012 and 2016 and compared changes after recreational cannabis became legal in January of 2014. While cannabis emergency room visits rose in 2012 and 2013, this accelerated after legalization in both inhaled and ingested cannabis. The study's authors said educating users on concentrations of THC, as well as other compounds like CBD, which can mitigate THC's effect when smoking, could minimize emergency room visits. This is particularly true for edibles, where the delayed and longer lasting effects of the drug can increase the chances of inadvertently taking a larger dose. Edible-related emergency room visits are more common among tourists, suggesting that a naive user might become more at risk. Dr. Nora Volkow of the National Institute on Drug Abuse said that these findings are also underscoring the urgent need for greater oversight of manufacturing practices, labeling standards, and quality control of cannabis products marketed to the public. And a study last week showed that a third of psychosis cases in London could be attributed to a more potent modern strain of cannabis, which are found in the UK. Here's an article from Leafly on why cannabis industry should embrace diversity, equity, and inclusion, titled, "How Can Black People Get Rich Off Cannabis Too?" The single most important thing for Black people in the cannabis industry is a social equity system built by the government to help educate, support, fund, build, and give Black people the opportunity to succeed across all channels of this industry. The very first social equity program in cannabis was created in Oakland, California in 2016. It was designed to reserve and provide licensing as well as funding to Black cannabis businesses. It was also a prototype that every other cannabis equity program was built on. The whole purpose of their equity program was to give people of color and people with criminal records opportunities and ownership that white people have had in cannabis. The cost of creating a plant-touching business is astronomical when it comes to licensing, manufacturing, operating, and general overhead. So who has that kind of money? Private investors. However, when those private investors don't want to fund your business, how can you proceed? This again is where the importance of the social equity program providing funds to Black businesses is established. Without it, the industry cannot honestly say it's providing the same opportunities to the marginalized. Considering the cost of owning and operating a cannabis business, the fund also needs to be large and accessible enough for more than just a couple businesses to get up and running. There's a huge lack of educational resources for Black people who want to enter the industry. Even in a perfect world where the government supports social equity programs that provide licensing and funding without incubators that provide education and mentorship for Black people on how to navigate the business of this industry, we will still be in a position to fail or even worse, be taken advantage of by big corporation entities. Along with ownership, another critical component to the success of Black people in the cannabis industry will be the empowerment from within. Outside of true government support, this is how they'll create a space for themselves within cannabis. In new industries, there's a theme of competition that comes from everyone racing to be the first or the best. It doesn't have to be like that. There's plenty of money in cannabis for everyone and tremendous value in collaboration. Social equity, reparations, the war on drugs, and minorities in cannabis, these cannot continue to be the buzzwords used to promote identities and principles that cannabis companies don't actually stand on. The industry was built on the backs of people who look nothing like those who were in the front streets of its success. It's time for that to change. It starts with an end, with an industry demand and government support. The success of Black people in the cannabis industry comes down to how truly committed the government and this industry as a whole are to correcting and repairing the damage done to marginalized communities from the war on drugs. Are you looking to break into the cannabis business? Here's some research that points to the hot areas of growth with 5 new cannabis trends that you need to know. Cannabis is not only the fastest growing industry in the United States, but it's also the most dynamic. It's far from a strained industry, trudging through incremental adjustments every year. In the cannabis business, trends and change strike fast and reverberate across the industry. So what's coming next? Number one is convenience is king. The initial phases of legal cannabis revolved around flower and concentrates like shatters and wax, all of which had to be added to vessels and either smoked or vaporized. But were they effective? Absolutely. But not always convenient for the customer. The dramatic rise of the disposable vape cartridge pens, which simplifies the consumption process to pressing a button and inhaling, illustrates the importance of new convenient form factors. In the same vein, consumers also like single-serve edibles and increasingly prefer cannabis-infused beverages that come in shots rather than the entire bottle. Research shows that half of the cannabis consumers say that they're largely influenced by the convenience of the consumption method. It's not just the way that they consume that matters to them, but it's also the ease of purchase. Delivery services are on the rise, just as they are for every other consumer industry. The proximity of the dispensary location is also proven to be vital. 67% of consumers identify location as convenience as a top consideration for where to shop. Number two is consistency, low dose, and effects options are on the rise. For more and more consumers, the days of just eating a cookie infused with presumably 10 grams of THC and hoping for the best are over. They want reliable doses and consistent cannabis experiences. They desire serving with smaller doses. For example, instead of breaking cookies in half in a futile attempt to ingest 5 milligrams, they would rather eat a pair of precisely dosed 2.5 milligram mints. Research also shows that 33% of cannabis consumers today prefer low-dose products, and in addition, 41% of these consumers wish products offered more in the way of targeting specific effects, such as relaxation and energy. In short, what do consumers want? Personalization. Cannabis drinks are chugging along. International alcohol conglomerate Constellation Brands invested in Canada's Canopy growth. Then Morrison Coors partnered with another Canadian cannabis company to create a non-boozy cannabis beverage. And Diageo, a parent company of brands like Kettle One Vodka and Bailey's Irish Cream, has said it wants to get into the action. So these enormous corporations are onto something. Cannabis-infused beverages have an effervescent future. Products as diverse as kombucha, tea bags, coffee now come infused with THC. Research shows that by 2022, cannabis beverages sales will grow in excess of tenfold compared to last year's 30 million in sales. Number four is that there's more demand for social consumption. For now, legal consumption of cannabis in most places demands private spaces, mainly in people's homes. But as legal cannabis becomes more normalized in municipalities across the nation, some areas are approving public spaces for cannabis consumption. This tracks well with consumer preferences, as 71% said that they will engage with cannabis for social and or recreational purposes, according to the research. Additionally, they find that a third of cannabis users specifically consume prior to meeting others, and 41% include consumption as part of their date night. Contrary to the stereotype of withdrawn loners, cannabis consumers have proven to be largely social and active. This reality has already started to shape the cannabis businesses and will likely to do so in the coming years. Number 5, gray is the new black. It's a popular belief that younger consumers utilize cannabis to have fun while older consumers use it for aches and pains and improve sleep, but this couldn't be farther from the truth. The study shows that 67% of baby boomers consume cannabis to deal with medical issues, but at the same time, 60% identify unwinding and having a good time as reasons to consume. The report anticipates marketers will catch up to the trend and adjust, offering products that deliver the full range of cannabis experiences. Here's 5 ways technology can transform the cannabis industry. The biggest transformation in the cannabis industry is likely to be of technology. A number of new technologies are already shaping the industry and on the verge of doing so. Here's 5 of the most prominent and exciting means of transforming the green rush. Number 1 is the seed to sale technology. One technology that's already a game changer is the introduction of point of sale and seed to sale cloud platforms for growers and retailers. Shopify, which is the best known for offering retail sales platforms for brick and mortar online and mobile weed sales, was chosen by the Ontario Liquor Control Board in February, which is a government-run province, and British Columbia in June, which allows private retailers and their point of sale providers. Since supply chain logistics can differ throughout North America and even Canadian provinces or US towns with legal states, Shopify's cloud-based compliance software can aid in seed-to-sale documentation. This platform does everything from intricately tracking the product from planting to its sale on dispensary shelves to ensuring the quality of the product that reaches consumers. Number 2 is LED lighting. Another interesting technology development is already being implemented in the cannabis space, albeit to a small degree, is the use of LED lights in place of high-pressure sodium bulbs. The only real concern is that unlike high-pressure sodium bulbs, the crop yields on LED isn't well known. As more growers give LEDs a try, it'll be surprising to see this shift to more efficient lighting options stack up. Number 3 is the electricity storage. Another energy-based innovation that's going to transform the cannabis space may come courtesy of the electronic vehicle giant Tesla. Tesla's Powerwall Power Pack solution offers a means for small, medium, and large growers to store electricity. While this stored energy would come in handy during an extended power outage, its real benefit is that it would allow pot growers to purchase electricity during non-peak hours for use during peak hours. Although the savings would be just pennies on the dollar, this would add up significantly over time, potentially saving weed growers a substantial amount of money. Number 4 is cannabinoid biosynthesis. Currently, almost all cannabinoids are produced by traditional extraction techniques. This tends to be fairly costly, which is why consumers pay premium prices to get their hands on cannabis oils, either tetrahydrocannabinol, THC, or cannabidiol, CBD, or most alternative products containing a high percentage of THC or CBD. However, new methods of extraction have taken hold, biosynthesis, using microorganisms to create yeast strains capable of producing desired cannabinoids, including rare cannabinoids. However, a few methods of extraction have taken hold, biosynthesis, using microorganisms to create yeast strains capable of producing desired cannabinoids. What few companies are involved in this new extraction technique believe it'll help lower costs, improve commercial yield, and be implemented regardless of the weather. In essence, cannabinoids could be produced on demand and year-round. Number 5 is a cannabis breathalyzer. One of the biggest problems for law enforcement officers are facing is the guidelines for cannabis impairment. The solution could be a cannabis breathalyzer. So right now there's a small handful of companies, mostly private, working on cannabis breathalyzer devices that would allow an officer to determine impairment and recovery of use. If law enforcement agencies had these products at the ready, it'd be possible we could see more willingness by U.S. towns to allow cannabis sales. This technology is still in its early development stages. Nevertheless, it's the potential to transform the way that cannabis consumes and is regulated. This technology is still in its early development stages. Nevertheless, it has the potential to transform the way cannabis is consumed and regulated. The world of automation has transformed every aspect of our lives. For stock pickers, this is creating numerous investment opportunities and nowhere more than in the rich and diverse global market As some firms quickly establish themselves as market leaders, opportunities abound for technological innovations in the legal cannabis industry. Technology is playing a critical role in the legal cannabis industry. There's no national infrastructure for legal cannabis. At the moment, there's an ongoing process of creating by means of sheer determination, ingenuity, and innovation. New technology firms are emerging in great numbers to fill the structural gaps left by nearly a century of prohibition, but there are many needs still to be met. Such companies have a critical role to play in these early stages of industry development, and the value that they can add is difficult to overstate. Many technological developments have coincided with the recent push towards legalization in several states. As new cannabis companies grow and expand, they'll require more comprehensive base solutions, which present another interesting opportunity for technology to enter the market. The scope and nature of the data that cannabis companies will require is unique given the nature of the industry. Truly comprehensive business strategies require analysis of market patterns, consumption trends, public opinion, price fluctuations, legal developments, and even the state of black market, both at home and abroad. Software designed to gather and manipulate this type of information is highly appealing to growers and distributors seeking to mainstream their operations. It frees up cash flow and human capital to invest in other areas such as marketing and advertising, two other crucial elements in the evolution of cannabis and its legitimate industry. Already there are apps designed to promote the brand of the grower themselves rather than the dispensaries that sell their product, a marketing approach more in the tradition of California vineyards, which may end up as the standard operating procedures as competition becomes fiercer on the production side. The opportunities for technical innovation are seemingly endless, and much of the industry is operating carte blanche as it continues to reinvent itself. New technologies will be needed to meet this challenge, as well as the many others that are inevitably on the horizon. Many have already stepped up and are quickly establishing themselves as industry leaders, at least until the arrival of the next big thing. The startup Sea-Doo unveils the world's first automated cannabis farm. Sea-Doo says it's taking the guesswork out of growing weed. The Israeli-based startup flagship product is a mini fridge-sized device that automates the process of growing cannabis for home farmers. Sea-Doo is taking the tech to the next level with an announcement of what's being called the first automated cannabis farm, and it could foreshadow the future of the cannabis industry. In March, Sea-Doo announced plans to fully automate a commercial-scale cannabis farm as part of a new partnership with Kibbutz Dan, an agricultural-based community in Israel, which recently approved the exportation of medical cannabis. Based on a video released alongside with the announcement, the farm will consist of a series of stackable shipping contained sized units, each capable of supporting enough cannabis to yield 360 pounds of cannabis per year. Inside the container is a robotic arm that manages the physical aspects of cultivation and a system of cameras keeping an eye on the operation. Meanwhile, machine learning software serves as the farm's brain, ensuring optimal growing conditions. By automating the cannabis growing process with climate-controlled containers, Sea-Doo claims it can ensure a consistent, uniform yield that's pesticide-free and high quality. According to a press release, the startup expects the partnership with Kibbutz Dan to yield a total of 4 tons of dried cannabis bud during the first 3 years of operation. That's enough to generate a predicted $24 million in revenue. So if Sea-Doo's estimate and quality claims are on point, it might not be long before we see an automated cannabis farm cropping up wherever weed is legal. We're definitely going to see an influx of automation. It's basically already here. About 5 years ago, we created an automated grow system that was really just basic. Instead of a timer, it was based on some conditional formatting like soil moisture, lumens, all different kinds of factors, humidity, I mean, you name it. So it was really important to have the camera also look at the leaf and have some AI attached to that. So if the leaf was tacoing, then you knew that it was probably either dry or there was a nutrient issue, and so on. And so that's just one form of automation. Another one is going to be at the processing side, joints being one of the most sold products. You're going to see a lot of pre-roll automation, a lot of joint automation. You'll see blunts coming on the market with hemp paper or mint paper or natural unbleached white paper, all being automated. So whether it's facilities to grow or products to make, automation is going to be key. I'm actually hosting a podcast on April 19th at the World Trade Center about automation, so come back and check it out. Better dosing may be the key to cannabis industry's growth. In 2014, legal cannabis was still fairly novel. Scientists in Canada did DNA testing on a number of cannabis strains. They found that a serious disconnect between what strains were being labeled as and what they actually were. Strains that were supposed to be different were often the same, and strains that were supposed to be the same were often different. That makes marketing cannabis incredibly difficult. If a product promises to put a user to sleep but actually keeps them awake, that person isn't going to keep using cannabis. In order for the market to truly grow, cannabis has to become much more like alcohol. Most drinkers can predict what they're going to feel, and after one glass of wine or a shot of bourbon, it's all the same. In order for the market to truly grow, cannabis has to become much more like alcohol. Most drinkers can predict how they're going to feel after one glass of wine or a shot of bourbon. Some of that comes from experience, but largely it's because there is a consistency in alcohol levels across brands. The cannabis companies that can figure out the dosing conundrum stand to make huge gains in the industry. California-based Cream of the Crop Gardens is hoping to lead the pack on dosing. They're working with scientists and hundreds of cannabis users to better classify their products. Cream of the Crop currently sells mostly flowers along with products called Rest, which is a mix of cannabis oil, melatonin, valerian, and other herbal extracts. But they're also conducting studies on how different strains actually affect people. Their test subjects are their thousands of followers on Instagram who happily do blind testing on different strains and report their experiences. Terpenes are organic compounds found within the plant and are key not only to the taste and texture, but to the effects of different strains of cannabis. As they've conducted their field test research, they've been able to gain a deeper understanding of which terpenes are present and which produce what effects at specific doses. Keeping quality consistent across different growing facilities can be challenging, which is why, for now, Cream of the Crop is focusing on all of its growing in the Desert Hot Springs, a town just outside Palm Springs. As companies gain a deeper knowledge of terpenes, they'll also be able to offer more control over their cannabis experience. And that way, they'll see fewer complaints and more happy return customers. And with that, we're going to roll this one up. Don't forget to like, share, and subscribe, or don't. And I'm out.
Trey B.